Greetings, Dr. Jeffrey Scott, and this is my Market MRI Pro update for Wednesday, December 17th, 2025. Another rough day in the U.S. markets. Um, you wonder if and when they're going to bounce, but they always do. I mean, we failed to hold what looked like at least a morning rally. I think many of our portfolios were up. And then I think it was perhaps the location that was it Arizona? I can't remember exactly where they voted to not allow the building of a data center. And subsequently, we saw a breakdown in the market and led lower by NVIDIA. So it really begs the question, will the market still see Santa? Again, my name is Jeffrey Scott, marketmripro@gmail.com, Google Group Top-Down Trader, website marketmripro.com. Santa is not always a given. It just usually does happen. So, but as has been pointed out by one of my favorite people on the board, and the one who comments the most in the remarks, technically Santa Rally starts on the 20th. So that would be for next week because the 20th is on Saturday. As always, it's for educational purposes only. Any recommendations in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis, how I apply them. Trading involves risk. You, owner, are solely responsible for any investment decisions you make. I'm the owner, intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisor before making trades. I have tools in many platforms, but I am an independent trader, and I can trade at any platform I want to. Google Group is called Top Down Trader. Why join? Because there are often discounts I give to the Google Group members. And more importantly, I will invite you to some limited engagement education programs that I don't open up on YouTube and to the general group. And if you have my tools, if you're interested in my tools, or even like how I sound, join. It's free. Why not? You can always quit. You control your membership. For any information about what I do, marketmripro@gmail.com, including pricing and other questions about my software, and coding at marketmripro.com if you have any issues with the software, and consider joining Top Down Trader Google Group. All right. Well, you know, when I looked at the 15-minute charts after the market closed, it really looked like the day was starting off hot. Okay. And then uniformly, late morning, the markets just turned around and came back down. All at the same time. About the same time, I'm seeing on TV that some city voted down data center. And when you think about the need for data centers to power AI, just what the world needed was more negative news for AI. And NVIDIA broke today, but something interesting happened after hours. So let's just go and look at NVIDIA real quick. So NVIDIA, has started the year. Oh, somewhere we'll find December of 20. So it started the year in the 136 range. It's down to the one. So it started the year here. Need to get the right date. So close on December 31st was 134 and change. Where it's at right now, after today's sell-off, it closed at 170.94. So it still had a pretty nice return on the year. The sell-off is not surprising. It struggled to get back above the 50. It's not healthy looking. It almost questions whether the 200-day is the ultimate destination. Notice relative strength broken down, OBV broken down. High-low jump is low, but remember it goes to minus 100, so it's still got plenty of room to go. But then after hours, Micron, MU, had what's referred to as a triple play. And Micron, after hours, beat on earnings, beat on revenue, and guided higher. 478, 167% growth, and a 20% surprise. Revenue, 56% growth, and a small surprise. A multiple that's 12. Anybody think Micron's going higher? Of course it is. It was up 8.1% after hours. Notice it's bouncing right off of the 50-day moving average. So the question is, will this drive the component makers and the rest of the AI complex higher? I don't know. I think it's a tough market right now, but if Santa's coming, he's coming soon. Maybe Micron brings Santa with us or to us. If I look at the daily briefing, you'll see the sell-off that we had today. Running a little slow tonight. I actually just rebooted my computer for that reason. We can see that the leader today and on Wednesday's volatility up 1.5%, closing at the high of the day. That's never good. Dollar was up 22 cents. The diamonds closing at the bottom of the range down 0.46. The Russell, the bottom of its range down 1%. The Spider, bottom of its range down 1.1. And the Qs closing at the absolute bottom of the day minus 1.85, and then Bitcoin down another 2%. I call those bearish closes when big down days and closing at the low. And typically that leads to more selling. But wait, will Micron make a difference? We'll have to see. Interestingly, at 52 weeks, the new high, new lows on the NYC is still high. On the NASDAQ, it's turned negative. That's not good. If we look at participation, 53% of the stocks in the S&P 1500 actually were up today. Well, that's decent breadth, but that's 15 of the larger, 100 of the larger stocks, even though it includes the 400 and the 600. The NASDAQ only 32% were up, and the NYSE only 47% were up. So from a breadth perspective, maybe it doesn't look as bad as the index and some of our portfolios probably felt. There are days when your portfolio underperforms the market, and that's typically a breadth issue. Now, or it's a tech issue in the case today because technology was down 2.22, industrials 1.62, discretionary down 1.16, even utilities were down 0.65. It feels like this was sell everything perhaps in the AI complex today. And early on, some of them were looking pretty good. If we look at themes that worked, well, energy had the led with 2.21, and then the next one is staples, and then real estate, materials, very defensive looking. And besides cannabis, we've got oil and gas, gold miners, lithium, silver, MLP, copper, a little bit less risk on picture there. If I go into the timing brief, it deteriorated significantly. The spiders broke down, the Russell technically broke down, closing just below the WMA. And now you can see the little red dots where 3 of the 4 daily index ETFs closed down. That changes my approach to the market. We had hoped that the spider was going to hold yesterday. Diamond has not yet broken. When I look at weekly charts, you could see we haven't broken on the weekly. So technically, we are in an uptrend on the intermediate weeklies, but on the short terms, we're pulling back. And the question is the pullback going to lead to a big sell-off, or are we going to bounce? I'll show you evidence for the bounce, but no one says that anybody has to care about my evidence. If we look at the US market ETFs, I mean, clearly we're not behaving. We're not going higher. We're not going sideways. The spiders today broke down through the 50. Notice on the last pullback, they pulled into the 100, which is higher now. So if a pullback and a bounce there, not the end of the world, folks. And you're still in an uptrend if you bounce there because all I got to do is get another higher high because my lows have been, well, this was the first lower low. I just need a higher low to stay. And if it bounces here, I'll have a higher low. So spiders have broken down. Concerning, yes. Notice down here we're seeing a series of red dots and not green dots. So and even OBV is broken down. So clear weakness developing in the spider. The Qs, which were the first to drop below the 50, are heading down to the 100, which is where they bounced before. So that's exciting. Maybe we get a bounce off the 100, but at least in the short term, they want to go lower. The diamonds, the ones that haven't broken yet, are they about to break? Well, they certainly look like they're heading down to the 50, barring any abrupt change in how the market is behaving. The Russell, one of the ones that has got a short-term sell signal. Whoops, didn't need that. I need this. Um, Not quite at the 50. And notice that we've got 1 or 2 more days of bearish seasonality before seasonality turns up. And that is pretty much across the board. So that's got to be the hope that when we come back next weekend, Santa's arrived and we see the better seasonality. Now, excuse me, tired, it's late. Now, something that is maybe a good thing is even though volatility was up today, fair amount, 7%, it's still trading below the 50, and it's going to have to break there. It's going to have to take out these two tops for me to get real nervous. I'm nervous here. I'm raising cash, as I talked about earlier in the week. But volatility is still low, although it's moving higher. And if we look at the US dollar, it's way off the highs, but at least on the short term, it was up today, 0.22%. This was worrisome, I guess. This squirting out of here was better, kind of bouncing around and consolidating here. With the dollar not making too much noise, even though it was up a bit, gold and silver have both been on fire, but it's not across all commodities. And you can look here, nice squeeze or breakout rather above this trend line. Gold was actually up in the markets today 0.86% despite the sell-off. And if you look at silver, silver is massively at all-time highs, and silver broke, I think the commodity broke a new number today. I thought it was close to 65 on the commodity, good volume. Silver's on fire. How much was it up? It was up 4.38%. So silver and gold continue to lead. Both oil up 2.74 and natural gas up 4.46% bounce today. Last night I was surprised that we hadn't seen any movement in the complex with what's going on in Venezuela. And of course, while I'm saying that, energy was rebounding. 10-year looks like it was down a bit today. That's a good thing perhaps for the markets, down 0.69. And the 30-year looks about similar, down, I think just a bit. Let's blow this up so we can actually see it. Down just a teeny bit, 0.04. So dollar really consolidating, 10-year, 30-year kind of flat with the prior day. I think the sentiment is just so awful now because of AI. Um, I'm not convinced Micron fixes this, but it may, and I'll be watching for that. The um, buckets is a sense of how overbought, how oversold we are. We're starting to show more stocks underneath. We had 11% of the NASDAQ below their Bollinger Bands. We're nowhere close oversold enough to expect a bounce on that indicator. If I look at the market breadth, a surprise appearance. Mr. Hindenburg is back, and this is more than 30 bars, so I would assume this is a brand new signal. Needs to be confirmed before it counts. For those that don't know the Hindenburg omen, it is felt by many to be an old wives' tale, but it represents a market with entropy, with a lot of new highs and new lows, and some people would describe it as the professionals realizing the market's rolling over and they're selling to the amateurs who are us. The reason why I track the Hindenburg Omen, which is classically signaled on the NYSE, is because when I've looked at the NASDAQ as well, it predicts major pullbacks. It is wrong often, but you won't see a major pullback without seeing Hindenburg Omen. So when I see it, I've got to be concerned, more reason to raise cash and be nimble. And I'm not deploying a lot of cash to the market right now. I'm taking it out, and I'm pondering about whether it's time or not to enter contra ETFs. I still think about a bounce is possible here, and I still think we could see Santa next week as the volume dries up, as a lot of people are on vacation. But this Hindenburg omen, that's new. So major failure at the 50. We tried getting back on Tuesday, really broke down on Wednesday. Looks like we're heading to the 50 on the NYSE. So this is NYSE composite, NASDAQ composite. Number of stocks above the moving averages continue to drop. And we already saw that the new high, new lows were positive for the NYSE, negative on the NASDAQ, but the AD lines up, down volume, negative on both. And again, the Hindenburg omen, which is this triangle, is something that we see on the NASDAQ. You know, where it really, to me, is meaningful is that if you go back to the Great Depression, I'm not talking about 08, 09, I'm talking about 28, 29. There's never been a substantial market sell-off that was not preceded by the Hindenburg omen. Old wives' tale? Maybe. I've been using it for 30 years and it saved me my bacon more than once. I heed the Hindis, but to count, it needs confirmation, which means another Hindi signal in the next 30 trading bars. What else do we have? And then the market breadth, new high, new low, especially the 13-week. And the only thing optimistic you can see on each of these, the RSIs are plummeting. The AD lines haven't really rolled over that much except for the NASDAQ. But if you look at stocks at new highs versus new lows at 13 weeks, we're now down to 0.38 on the NASDAQ. It can still drop more. It's got to get to less than 0.1 for me to get excited, but it's dropping pretty quickly. And I'll be watching that to give me a signal that a bounce might be imminent. Looking at stocks today, yeah, it's tough for me to show a lot of stocks. Why is that? Because, you know, we're in this flip-flop market rotation market. The market participants may wake up tomorrow morning, see the Micron earnings, say the trade for AI is back, and everything gets marked up. They also may look at the earnings and discount them and sell Micron back off. So there's no guarantees, but historically for me, triple plays become meaningful. I've got two scans I like a lot. One's called the A plus scan. Ignore ARBKL. I've asked Praveen to pull it. I think it's no longer trading. Why is it there then? Because this last trading day it had a double momentum, but I can't find the ticker anywhere else, and I think that was it. It was an 8.75 notes. MGRT is a tech company, mega fortune. I don't know what they do, so I might see if we have technicals. Nope, too early. No news. So um, when I see a stock that on the prior day closed at 535, today closed at 1305. I want to know more about it, so I might try and do research. It's an IPO, that's clear. But after a move like this, you certainly expect it to pull back for a couple days. So really nothing in the A plus, no surprise the market's under a lot of pressure. And if we look at the A's, AKR is a real estate stock. Now, if I was in a buying mood, I would say, well, you know, it's kind of heading up, crossed over the 200. Um, there's my CPR signal, a breakout in momentum, relative strength and OBV perking up. Well, it's kind of okay. But if the market sells off, it's going to sell off with it. Steady Eddie on earnings and revenue pays a 2.92% dividend. And I looked over here to see if there's any news today. New strong sell stocks for December 8th. Well, that's never good to see on your stocks, but the good thing is they're not always right. And that was a week ago. And you could always click on the link and pull the story up. One of my favorite features. All right, and then PMT is a little bit more interesting, a mortgage investment trust. there are probably better ways to play it with some of its bonds and preferred stock. Um, you wonder if these guys don't end up cutting their dividend at 16.57. You're going to see 41 cents versus 41, so it's very stable. It's a sideways mover with a huge dividend. Um, that's not usually what I play. I'll take a big dividend with growth, but I think this is what you're in if you're looking to play dividends and don't want to see big capital appreciations or loss. Keep in mind that this thing here is just under 12. This thing here is just over 13, and you just capture the entire year worth of price movement within a $1 range. It's about buying something, sitting on it, and taking a big dividend. Not typically how I trade, and probably not how most of you trade. All right, so I did that. I got to get out of that. There we go. All right. Now, if I look at from a top-down perspective, and I'm really not going to go much further tonight because I just don't want to be barking up stocks when there's this much rotation and I'm concerned the market's going to take a dump here. But on the top-down perspective, what was up today, you could see energy, real estate, and staples. This is a large group of stocks, 3,761. It's going to be different than the S&P 1500. I could pull just those three. It narrows me to 565 stocks. I could rank the various industry groups in those three sectors and pick the top 10. And now I'm down to 215 stocks. And then I could come in here and just rank them by positive momentum and see if anything looks good. Take two or 2 Hours investment, my bad. So no earnings today, pays a 19% dividend. That's pretty impressive if it doesn't go away. All right, it's being acquired, so we won't pay much attention. UDR is another REIT. I believe it's an industrial REIT. How would I know? I highlight that. Just hover over that, and it says leading multifamily real estate investment with a demo. All right, so it's a multifamily, not an industrial. Earnings are very steady, pays a 3.9% dividend, looks to be in a steady uptrend and wants to go higher. EMT we looked at, INDO, no thank you. EQR is another real estate trust, and it looks just like Two Harbors, excuse me, UDR rather, with a nice new uptrend. It's got a CPR volume breakout momentum. What's it look like for? Pays a 3 point, hover over, 7.6 dividend. Not much growth, but sometimes that's okay if you're looking for the dividend or stock appreciation. EFC, Ellington Financial. Again, you're seeing this pattern. Here's a stock that's sideways, and it had good volume, a CPR volume breakout momentum, relative strength and OBV. So there are some things that look good here. ExxonMobil, it's in an uptrend. Pull back to the 50, probably runs on the current trouble times for the energy complex. TRGP, I believe that's an MLP. We'll know because if it is, it pays a dividend, just a 1.57. Gathering, processing, logistics, and transport. Yep. All right. So I think energy was interesting today. I'm looking for better looking charts than that. TPL, large energy producer, positive day, but well below the 50. Starwood is another leisure related hotel stocks. We've seen a lot of hotel stocks over the last couple of days. I guess traveling is still holding. NNN REIT, don't know what this one does. So the REITs are okay if you like dividends. They don't look like great growth stocks, and I won't say they have the best looking chart patterns I've ever seen, although there's nothing wrong with UDR except I don't like to buy below the 200. So on that note, I'm falling asleep, so I'm going to start babbling, which is bad for my reputation. But I'm appreciate you being here. I appreciate you putting up with these videos. Really appreciate those of you that have purchased the tools. Doing a lot of thinking about appropriate pricing and where the value proposition is in my toolkit. Um, I'm not planning on doing any changes anytime soon on the annual. So starting, I think in May or July, we'll be the first ones people pay for it. But after looking at what's on the market and realizing I'm not selling a series of indicators, I'm selling a platform that's basically took a lot of the things that I've learned over the years, especially from Ian Woodward, and have tried to make an easy workflow solution. I've been on this less than a half hour and I've been talking, talking, talking. Imagine how quick you could have done this without me. So there will be some substantial price increases on the my main platform, to be determined how big, but it's I'm charging it like a good indicator. I need to charge like a platform. Not trying to scare anybody, but if you're on the fence, I will honor anybody ask for the Black Friday price until the end of the year, or at least probably to the 29th. I will be doing a webinar on the 30th that will have a pretty broad-based introduction to people outside my core. Um, and I will probably announce the new price structure then and a special price that may be higher than the 14.95. It's never going lower, and I got to push the price point up because there are costs involved in running a platform, maintaining the world's best programmer, who thank God is also a trader, which makes it much easier to retain them. And I appreciate each one of you, especially those that comment, that give me the thumbs up, come to my live meetings, participate in my 3-hour sessions on Saturdays when we do them, and those that you owe my tools. Now I use mostly Market MRI Pro here for one reason. I don't want to talk for long, and the workflow is really good, and it captures all my breath tools. I still support the well charts people, the Metastock people, the TradingView people, and TradeStation. And it'll be my New Year's resolution to try and get more videos out supporting those other platforms as well. Have a great, great, great Thursday. I'm planning on doing one Thursday night, but my grandson's coming. I haven't seen him in 6 months, and you better believe he's more fun than doing a webinar. So, but he does go to sleep early, not early, but he'll go to sleep eventually. So I always tell you I'm not doing it because of family things, and I do it anyway. So be safe, trade safe. Don't throw all your money in this market until you see a confirmed uptrend. And right now, if I had to guess, I'm not sure Santa's coming. Take care, everybody.